we launched the trial of our CBDC project. It was indeed a landmark moment in the history of money, in the history of currency in our country. Going forward, it will be a landmark moment. It will be a landmark achievement so far as the functioning of the entire economy is concerned. So in that sense also, it's going to be a major transformation of the way business is done, the way transactions are conducted.
The governor is not indulging in an exaggeration. This is a transformational moment. India's digital currency, not crypto, central bank digital currency is here. At the moment, only 9 banks know how it works. That's because the Reserve Bank has selected these 9 banks, SBI, Union, BOB, HDFC, ICICI, Kotak, Yes, IDFC and HSBC, to participate in an experiment, in a pilot. Now, these 9 banks have only been allowed to trade government bonds by spending money in CBDCs. So how is the pilot going? By when will all banks be able to trade bonds? And by when will you and I use the CBDC? For all these, I have with me 3 people who are actually in this pilot, who have been invited into this pilot. Raghavendra Balakrishna, the DMD at SBI, B. Prasanna, Head Global Markets Group at ICICI Bank, Amit Sureka of Yes Bank. Also joining us is Venkat Chalasani. He's former SBI DMD, was in their treasury and also a board member at CCIL. The CCIL is the body which acts as an exchange for bond trading. Okay, so I think we have the most appropriate set of people to describe what happened to us. Let me start the discussion with you, Mr. Balakrishna. If you can tell us just what is happening in the pilot. I mean, I assume you have to first transfer your Rupee account in RBI, transfer the money into a CBDC account, into a digital currency account?
Yeah, what we did is that initially certain amount, which is lying with RBI under our CRR quota, we have transferred to an RBI NSDO CBDC account. There is a digital account, exact money we transfer some X amount. It has been created in our CBDC digital account in the form of e-rupees. And once that platform is live at yesterday, we among with other 8 banks, total 9 banks have participated. The bank, we did the first deal. The bank who want to do some trade with us, they bought from us, they sold, and we bought from them. What we did is that equivalent amount money, it has been credited by them to our CBDC account. And we, parallel it happened, our concerned security is debited from SGL account and transferred to their account. So settlement is instantaneous, and we can able to see our balances in digital currency instantly updating.
Okay. Prasanna, can you add anything to this? I was told that the NPCI is involved, that the CCIL was also involved. I thought we were going without CCIL's help, but CCIL's screen was also used. Any more details you can give as to how this is working?
Yeah. So first of all, Lata, I think compliments are due to the Reserve Bank for thinking through this case and deciding to do this pilot for wholesale CBDC and using government securities as the first use case for really using the digital currency. And when it comes to payment and digitalization, I think as a country, we are way ahead of the world, and in terms of person-to-person payment or even person-to-merchant payments. And I think something like that is going to be hopefully happening on the wholesale front as well. So like Raghavendra described the process pretty clear. I think what has happened is banks have opened a separate CBDC account with the Reserve Bank. And apart from their normal, INR current account that we have, and the SGL account for the government securities is the same SGL account that we already have.
Yeah.
But now, like you said, NPCI, there is now an NPCI portal which has been created that allows banks to put in requests for converting their INR balances with the RBI from their current accounts to the respective CBDC account and vice versa. And again, you said there is a separate Indiazome environment which has been created by CCIL, where these 9 banks who have been chosen have been a part of the, have been given that environment. So start of the day, the banks convert the INR into CBDC. And once they have the CBDC balance, they can actually trade on this pilot Indiazome on stocks on which the banks have a clear balance. The trading is actually through the platform, the RFQ platform, which is built by CCIL, and it is bilateral. There is no CCIL guarantee for the trades which are happening on that. They settle gross, but they settle instantaneously. So in this environment, actually, Lata, we are actually going from a T+1 settlement in the current process, from what you can probably call as a batch processing that happens at the end of one day where net settlement happens, to a T+0 and instantaneous settlement. So you really see when a transaction is hit on the screen, you get the current account debit. If you bought securities, you get the debit on your current account with the CBDC account, and you get a credit on your SGL balance instantaneously. That's what is happening in the bank.
Okay, so if you're getting the guarantee, I mean, if you're getting it instantaneously, you don't need CCIL guarantee. Right, Prasanna?
Yeah, you can argue definitely like that there is possibly no need for a guarantee in terms of this particular way of executing, because it's instantaneous. But having said that, I will also add that it is actually possibly going to be an option which are given to the banks going forward. I mean, you can either choose to deal in the parallel environment, or you could possibly, I mean, that's what I'm guessing. I really don't know how things are going to be. I think we're all meeting and talking about this at very early stage of the evolution, but definitely something very positive. A lot of things are changing, and government securities settlement also being a part of the evolution.
Yeah, no, I agree with you. Technology initially, moves slower than we expect, and in the longer term moves much faster than any of us expect. So I know we are trying to outguess, but Amit, what is your best guess? Do you think that it will become all banks in all bonds very soon? Is the system in its second day giving you that confidence?
So Lata, first of all, the way RBI has driven this entire implementation of CBDC wholesale, that itself is too commendable. I mean, they have taken an incredible effort to make this happen in such a short time frame. And I would echo the thought shared by Prasanna on this. Now, in terms of further expanding it to non-GSEC and even the GSECs to other other participants in the market, probably RBI is already working towards it. And in probably very short time frame, at least the GSEC wholesale CBDC settlements should be able to move to all the banks in terms of participation, and we will see the trade volumes and the trade counts happening on this platform very soon. As Prasanna also mentioned, the T+0 settlement definitely helps banks in terms of getting the securities instantly, unlike NDS OM, where the settlements are T+1, and elimination of intermediary, in terms of whether CCIL or any other intermediary, that is possible. So when we move to corporate bond CPCDs, probably there are other intermediaries in terms of account transfers of Demat in Demat for bonds. Those intermediaries also will have to work with RBI for this to happen for bonds and CPs and CDs.
That you brought it nicely to the question that I wanted to ask Venkat, because Venkat, you are the only person who has been a board member with CCIL. See, normally we trade with the exchange. I'm speaking to a largely stock market audience, so we understand that. We trade with the exchange. Even if I am buying from you, I don't know I'm buying from you. I am buying from the exchange and you are also selling to the exchange. If we start bilaterally doing it because it is CBDC, then does a time come when we dispense with CCIL?
First of all, as I echo the sentiments that have been expressed both by Amit and Prasanna, it's very commendable. On 7th of October, they came out with the concept paper, and 1st November, we have introduced it. Globally, if you look at the way in which India has moved forward in the digital payments, it's really great. And we look forward for the way in which the CBDC is going to be implemented across the country now. And of course, for the interbank payments, which is going to happen very shortly. But having said that, one of the important things that we are talking, the point that you raised about the CCIL's role, there are two ways in which it's going to be impacted. As our colleagues have mentioned, it's going to be a real-time cross-settlement which is happening.
and the commission and the margins. One, the commission which the CCL is going to earn is not going to be there now for each of the transaction. And the second thing is the margin money that we are going to post, because it is going to be DPV or various other settlement mechanism. And on the T plus one mechanism is going to come as T plus zero. I'm going to see it instantaneously in my account. So both these factors are going to be changed. And to that extent, CCL role is going to be diminished. When it comes to the other instrument which you talked about, these are both bilateral and OTC, over-the-counter products. And therefore, we need to have more of integration with other market players, be it in RTGS and others.
Okay. Oh, yes. Oh, yes.
But,
Yeah,
but
as
what,
even...
what happens is, Lata, when you're looking at the retail investors, then you talk about tokenization. I think that's the next step.
I'm coming to that. Yeah, because that is what I think the viewers really want to know. When am I going to have, a wallet where I put digital accounts? I don't have to carry my physical wallet. I'm only carrying my phone. That question in a minute after the break.